Welcome to the Crypto Law Weekly. Big news. Trump is expected to sign an executive order today that will allow 12.5 trillion of new assets to flow into Bitcoin through directing the Department of Labor and SEC to accept it into 401k plans. This order rolls back Biden-era guidance that discouraged crypto in retirement plans. But don't get too excited. It doesn't cover self-custody. In the fiduciary sense, they would be held responsible for a catastrophic loss. So if someone under one of these retirement plans was holding their own Bitcoin and lost their keys, the fiduciary could be held responsible for it under current laws. That said, holding Bitcoin in a 401k still has some serious tax advantages because you can let it grow without worrying about capital gains tax. I still firmly believe in not your keys, not your coins, but for some investors, holding some money with institutions, diversifying where you keep your whole supply is not a bad idea, especially when it comes with these major tax advantages.
President Trump just signed a bold executive order to combat debanking, the controversial practice used in Operation Choke Point 2.0, where banks denied services to crypto businesses. The order eliminates reputational risk guidelines used by regulators and mandates a thorough investigation into banks' past and current practices for evidence of unlawful or politicized debanking. Violators could face heavy fines or even referrals to the Justice Department. The EO also pushes the Treasury to develop protections and the Small Business Administration to help reinstate unfairly debanked clients. While banks insist that closures stem from compliance issues like anti-money laundering laws and not politics, this move could redefine fair access to banking for all. Stay tuned for more crypto legal updates from Hotter Law.
A big development this week in the DeFi space, the Tornado Cash co-founder Roman Storm was found guilty for conspiracy to commit unlicensed money transmission under 18 USC 1960. The jury was deadlocked on the money laundering and the sanctions charges, but this conviction alone is very dangerous. It sets a terrible precedent for DeFi. Now devs can be held criminally liable just for building decentralized tools. Even crazier, a few months ago, Trump said that his DOJ was not going to engage in regulation by prosecution, but that's exactly what happened today. This is a foundational case where a non-custodial software is being held accountable as a money transmitter. We had FinCEN guidance in 2019 that clearly stated if it's non-custodial, it's not money transmission. But there's a provision in the 18 USC 1960 that says if you violate any state law, you're violating federal law. And on the money transmitter state side, it's not as clear that non-custodial means not money transmission. So this is going to get overturned, I truly believe. But now, for the meantime, everyone in the DeFi industry is left in the lurch. As for the price, Bitcoin is currently sitting at 117,000 and we're predicting it will be at 119,000 this time next week. Technical and institutional momentum. Bitcoin has been in a consolidation range between 115 to 118K and it's primed for a breakout, especially with continued institutional buying and dwindling supply on exchanges. Macro tailwinds. We have a weakening dollar, strong ETF flows, and favorable regulatory signals. If these continue to align, we could see a major bullish breakout. And third, post-halving history favors August, averaging 35%. Bitcoin is trading above all major realized prices. The 6-month was 104K, 2 years 88K, and all-time 51K. This is textbook bull market structure. So what do you think? 119,000 this time next week? Let us know in the comments, higher or lower. Thanks.